Hare Krishna. Welcome to Tax Guru YouTube channel. This is C.A. Rohanar Pingle, practicing chartered accountant based in Mumbai, also partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to the video series on concurrent audit of bank branches. And today is a session 4. So let's dive into it. Let me allow to share my screen. Yes, and in session 4, we are going to discuss concurrent audit planning. So in the earlier sessions, we discussed the concept of concurrent audit, legal and regulatory framework, and issues relating to the appointment, tenure, and independence. In this session, we are moving to very practical and crucial area, that is concurrent audit planning. So remember, the effectiveness of concurrent audit depends not on how much we check, but on how well we plan. So concurrent audit is not a post-mortem exercise. It is real-time assurance. The effectiveness of concurrent audit depends less on volume of checking and more on quality of planning. So unlike statutory or internal audit, concurrent audit runs parallel to the operations, aims at early detection and prevention, focuses on risk mitigation rather than mere compliance. So it acts as an extended arm of bank's control framework. So therefore, planning is the backbone of concurrent audit. Poor planning leads to mechanical checking, missed high-risk transactions, delayed reporting, loss of relevance and credibility with the management. And well-planned concurrent audit ensures optimal use of audit resources, focuses on high risk and sensitive areas, and meaningful reporting and value addition. So we will moving further. We will first understand branch profile. Understanding the branch profile. Let's understand what is mean by. No two bank branches are identical. Even branches of the same bank can carry very different risks. Therefore, the first step in audit planning is to truly understand the branch profile. Very important. This understanding forms what? The base for a risk-based concurrent audit. Branch profile answers the question, what kind of risk does the branch inherently carry? So moving further, understanding key components of branch profile. Under that, we must to understand the nature of branch. It is metro, urban, semi-urban, rural, or a specialized branch like MSME, Forex, agriculture, retail, pension, currency chest, digital hub. The nature of the branch directly impacts what the audit risks. For example, a Forex branch involves what? FEMA and trade finance risks. A pension branch may involve government businesses and service risks, and a rural branch involves KCC, SHG, and subsidy related risks. So, audit planning must reflect this. Under business mix, advances versus deposit ratio, retail, corporate loans, MSME, agricultural advances, CASA versus term deposits, digital transactions volume. So branches with higher advances have what? Higher credit risk. And branches with heavy digital transactions have higher fraud and system risk. So volume also decides whether we adopt 100% checking or sampling based audit procedure. Under size and volume, number of transactions per day, value of transactions, clearing volume, CTS, NEFT, RTGS, UPI. So high volume branches require sampling plus exception based audit. And low volume branches allow 100% security of critical transactions. And under organization structures, experience and stability of the branch manager, vacancies, frequent staff rotation, outsource activities like BCS and CSPs. So frequent staff transfers and vacancy increase what? The operational risk. So past audit reports also plays important role, like long form audit report comments and RBI inspection observations highlight what weak areas. This must directly influence our audit planning. So past audit history is very important. LFAR observations, RBI inspection and risk-based supervision findings, previous concurrent audit reports, fraud cases, or vigilance references. This must be documented. So from that, we can plan our concurrent audit very persistent and very firmly. Means these are the bases that we need to understand before starting the audit, and which comes under the understanding of the branch. Moving further, risk-based approach to concurrent audit. Basically, what is meant by that? We are not checked. There are certain limitations to us also. So, risk-based audit approach is very important. That is shift from traditional to risk-based audit. Under that word, under traditional approach, we equal checking of all areas, checklist driven, transaction oriented, and reactive. But under risk-based approach, we focus on high risk areas. It is risk driven and process and control oriented and a preventive kind of nature. So RBI and ICAI emphasize what a risk-based approach. Instead of checking everything equally, we focus more on areas where the probability and impact of risks are high. So risk assessment is not static. It must be reviewed what continuously, continuous basis. So understanding risk in branches, under that, what are the key risk categories? That is, first, understand the risk is a function of inherent risks with controlled risks. So credit means key risk categories are credit risk, operational risk, compliance risk, fraud risk, reputational risk, technology and cyber risk. So as a concurrent auditors, we must understand different types of risks. For example, wrong sanctioning leads to what? Credit risk. Staff errors lead to operational risks. Non-compliance with RBI leads to what? Regulatory risks. And digital banking expose the branch to cyber and fraud risks. So that is a basic understanding of it. So risk assessment at planning stage, what auditor should do is to identify what can go wrong, assess the likelihood and impact of the risks also, and prioritize the audit focus accordingly our that analysis. So risk assessment is a dynamic and should be updated periodically, not a one time exercise. Moving further, identification of high risk areas. High risk areas require what? Continuous and frequent audit coverage. It doesn't necessarily mean fraud. It means a higher chance of error, misuse, or non-compliance. Please understand this. High risk doesn't always necessarily mean a fraud. It means a higher chance of error, misuse, or non-compliance. So what are the common high risk areas in concurrent audit? Under advances, we can say it's fresh, it will be fresh sanctions and under renewals, ad hoc limits, documentation gaps, stock statements and DP calculation. There will be high risk areas, SMA and NP identification. Under KYC and AML, high value cash transactions, dormant account activation, accounts open through BCS, non face to face onboarding. Under cash and clearing, cash retention beyond the limits, cash shortages or excesses, suspicious clearing returns. Under government business, pension disbursement, DBT credits, subsidy claims, refunds and reversals. And under forex and trade finance, wherever applicable, LC, BG issuance, FEMA compliance, export realizations, and under digital and electronic transactions, UPI, IMPS fraud, failed transactions, customer grievance handling, reversal delays. So these are the common high risk areas in concurrent audit. So before moving risk indicators, that is red flags, we will just review again. If you want, you can note down this. So what are the high risk areas? As I said, under advances, it may be under fresh sanctions or renewals, ad hoc limits, documentation gaps, stock statements and DP calculation, SMA and NPA identification. Under KYC and AML, high value cash transactions, dormant account activations, accounts open through BCs, non face to face onboarding, and under cash and clearing, it may be cash retention beyond the limits, then cash shortage or excesses, suspicious clearing returns, under government business, pension disbursement, DBT credit, subsidy claims, refunds and reversals, under digital and electronic transactions, UPI, MPS frauds, failed transactions, customer grievance handling, reversal delays, under forex and trade finance, LC, BG issuance, FEMA compliance, export realization. So these are the some of the key high risk areas we can say. These are the same, just few of the areas I have mentioned. So moving further, what are the risk indicators? What are the red flags? So frequent manual overrides, excessive sundry or suspense entries, repeated system exceptions, high staff involvement in transactions, delay in reversal of wrong credits, customer complaints trade. So these red flags acts as a what? Early warning signals. Means there are CBS, there are reports under CBS. They can red flag such type of errors also. So we need to download or we need to see those reports under CBS. A good concurrent auditor is alert, observant, and inquisitive. Not just become or someone who ticks a boxes. So that is note to down. Next, moving further, let's understand preparation of concurrent audit plan. Under that, we will see meaning of audit plan, elements of a good audit plan. So under meaning, what is mean by audit plan? Concurrent audit plan is a roadmap. We can say what is a plan means basic is a roadmap that defines what will be audited, how it will be audited, frequency of our coverage, and the after that resource deployment. So audit plan is the roadmap of a concurrent audit. It defines what will be audit, how frequently, and how issues will be reported and escalated. So serious irregularities should be reported immediately, not kept for monthly reports. So under elements of a good concurrent audit plan, an effective audit plan ensures what? Optimal use of audit resources and timely communication of critical issues to the branch management and higher authorities. So under scope definition, we can say areas covered are advances, deposit, KYC, forex. These are the main areas need to be covered, and exclusions if any. Under risk prioritization, high risk areas like continuous checking, medium risk, periodic checking, and low risk, there we can rely on sample based. And frequency of audit, daily we can also do the cash clearing, large transactions, and weekly comes advances, KYC exceptions, and monthly is that the compliance report. And under resource allocation, what how much the involvement of a particular partner, qualified assistance, use of specialists, these are also necessary. And under reporting mechanism, we must review the daily exception reports, which can be downloaded from the CBS, monthly consolidated report, and escalation matrix for serious irregularities. So moving further, let's understand audit program structure and its customization. So the difference, first we need to understand the difference between the audit plan and audit program. Audit plan is a strategic, what and why, and risk focused. That is the most important. And audit program is like a directly operational. It is an action, how and procedure focus. So the audit program converts the audit plan into action. While the audit plan is a strategic, audit program is operational and procedure oriented. So understand the structure of concurrent audit program. A good audit program should be area-wise, mention objective, specify procedure, indicate frequency, and link with a risk address. Example under advances, objective, ensure credit is within the sanction terms, procedure, verify the sanction node, DP, documentation, frequency, daily for fresh sanctions, and risk, credit and fraud risk. So under customization, we can say the customization is a key. Means concurrent audit program cannot be a standard for all the branches. we need to customize it depends on the branch risk and branch profile. Means whatever understanding, therefore the understanding of the branch is very important. So customization depends upon the branch profile, as I said, risk level, bank's internal policies, regulatory focus areas. So static copy paste programs reduce what the audit effectiveness. So we must not copy paste. We avoid the copy paste audit programs. A customized program improves what the audit effectiveness and enhances the auditor's professional value. And that is very important. And we must focus as concurrent auditor. Our role is like that. Moving further, let's understand use of checklist and control matrices is very important. So role of checklist ensures what? Consistency, coverage, and compliance with the RBI and bank norms. However, checklist should not replace our professional judgment. Please note down. Our checklist will help to consistency, coverage, and compliance with RBI guidelines, but it should not replace our professional judgment. So, and under control matrix is a we can say as a powerful tool. Means it links with a process, risk, control, and audit check. So let's understand with example. Let's understand a process or loan disbursement. So what is a risk? The wrong disbursement. What will be the control maker and checker, and what will be our audit check to verify the authorization? And another example under process KYC, what will be the risk? Identity risk. So control will be OVD verification. Most of the under CBS reports these flags OVD verification is if there are missing in main documents while opening the accounts. So audit check will be verify the documentation part. So control matrices helps in what? The risk-based planning, avoiding duplication, better reporting, and also help us to understand why we are checking something and what risks it addresses. So we are now moving to our conclusion part for today's session. Concurrent audit planning transforms the auditor from a transaction checker to a risk assurance professional. So, what are the key takeaways from today's session? Understand the branch before auditing it. If you want to excel yourself as a good concurrent auditor, you need to follow these all things. So understand the branch profile before auditing, note down it, adopt a risk-based mindset, identify and prioritize what? High risk areas, prepare a thoughtful and flexible audit plan. Customize the audit programs as per the branch profile and use a checklist and control matrices wisely. Should not be replaced to our professional judgment, and continuously update the planning based on evolving risks. So a well-planned concurrent audit does what? Prevents frauds, improves compliance, enhances branch efficiency, and strengthens the auditor credibility. So that's it for today. Thank you. Thank you so much for patient hearing. Hope you are getting valuable knowledge from all these video series. Please note down my contact numbers. If you have any questions, queries, suggestions, observations, then do let me know. If you are not yet subscribed to Tax YouTube channel, then do subscribe for latest updates and video series like this. So be connected. Thank you. Thank you so much. Bye bye. Take care. See you soon. Hare Krishna.